136, NASDAQ coming back a bit, still down 71. David Stryzewksi joins me now. David, I hate to say this, but it looks like my worst nightmare is coming. A lot of folks are heading towards retirement, myself included, with a dead flat market for years and years and years. Is that what you're forecasting?
Good morning, Stuart. So, being that we have all of these things that are in front of us, including many geopolitical challenges, I think that it's really important to understand that we've got a real banking crisis that's on our hands right now. We are likely to be seeing another lost decade. But a lot of people may have this narrative backwards. They think that we're going to find ourselves in a significant downturn that might last just a few quarters. I think that we're going to see more of a rolling recession that's going to play out over time. You know, the challenges that we've had here in these bank rates and the price of everything increasing for home buyers and corporate earnings are going to be a really, really big challenge as we head right now into the summer. So as I'm looking at things right now, yeah, I agree with you. We have some big fears if you are nearing or entering retirement, given the fact that the spending phase is very different than the saving phase.
So are you still putting money into like bonds paying 3-4%? Is that where you're shifting the money? Not stocks yet, into bonds? Is that you?
Well, that's not necessarily me. I think that bonds actually have a significant bubble right here. And I pray that this bubble does not burst in the way that it very much could. But I think that there's three things that people need to be paying attention to. Number one, their personal income plan. They need to have their own personal CPI. You know, CPI is kind of an arbitrary number. Your personal CPI is the most critical thing to understand. I'm in Europe right now, and many of the taxi drivers are telling me that they're having a hard time figuring out, you know, whether they're buying food or they're going to be paying for their utility bills. Second thing is, yeah, we need to have some different strategies here as we approach our investment horizon. And so I don't think, yes, sir.
But I just got to get this in. You don't think there's that much money to be made in the stock market in the immediate future?
Now, I do not think that there's a lot of money to be made. We need to ride bulls and tame bears. The goal is 70 to 80% of the pain while avoiding 70 to 80% of the gain while avoiding 70 to 80% of the pain. And so we need to understand the pain part of this thing will happen. Bear markets are bear markets are bear markets. And so it's critically important that we get that right. And then also, and lastly, the tax advantage planning strategy. You know, taxes are going to go up. Everyone agrees. We know the debt ceiling's high. And so as we begin to look at the future right now, this is critically important as we're understanding, hey, how do we move forward? What accounts and what amounts are we going to be withdrawing from each and every year? And we have 2 years, 8 months, 11 days before the Tax Cuts and Jobs Act runs out. So we must act quickly.
Okay. For all you retirees out there, watch out for estate taxes coming up. All right, David, thanks for joining us.
Sir.
See you again soon. Lauren's looking at the movers, and she is starting with